Hello, everybody. Welcome to Zoe's Treasures. My name's Tracy, and as always, my husband's here giving me a hand doing our graphics and running our cameras. Hello, the Thrifty Cottage. I'm so glad you made it. So tonight is week 7 of Ledger to Leadership. So week 7 of our accounting course. Good evening, Southern Charm. Hello, everybody. We are doing cash flow tonight. So we have spent the last 6 weeks kind of building up and building up and building up, and we're actually starting to get into the part of the very beginnings of your financial statements. So I'm going to recap, as I always do, what we've done weeks 1 through 6 to some degree. So we'll switch over to the iPad in a minute, and I'll write it out for you, and we'll just do a recap. And if you've been here every single week, you're like, my goodness, she does the recap every week. I do, but probably I can guarantee you that you're able to start to recite right along with me at this point because you've seen it week after week. So there is a method to my madness. Before we get going, there is a book or the PDF, either one, they're the same. If you're interested in it, it is not necessary for you to be here or for you to learn accounting. But if you're the type that likes to work off of a book, I did flash sell them. They are in the bin. So there's a book or a PDF. Again, not necessary. You could totally be here and just take screenshots or a pen and paper and work right along with us. And with that, I think we're going to get started. We are only going to go for an hour, so we're going to keep this to about 7:30. At any time, if you have questions, please ask the questions. I am always happy to stop and answer a question or talk about what we just did and go back over something. So with that, let's switch over to the iPad and let's do a little recap of the first 6 weeks, and then we'll jump into tonight's topic. So let's see here. I've got to get this mirrored. First off, get these words off the screen so you can see what we're doing. All right, and I'm going to mirror this iPad so that you can see it. Don't you love when you click something and it just spins and spins and spins? There we go. All right, so we should switch over now in just a second. Okay, so let's start. Week 1. In week 1, get this down here, we talked about our accounting equation where assets equals, let's see if I can get that, liabilities plus, oops, it keeps changing on me. There we go. Plus equity. All right, so that's our basic accounting equation. That's what we learned in week 1. Then in week 2, we added on debits and credits. So debits and credits don't mean good or bad. It's just what increases these type of accounts. And before we hit our debits and credits, I forgot to write down here how your revenue and your expenses hide and live underneath that equity part of the equation. So then we start talking debits and credits. Debits increase your assets. Credits increase your liabilities and your equity and your revenue. And a debit increases expenses. So the accounting equation is like a scale. We always have to have a debit and a credit to always keep it balanced in everything that we do. So then if we talk about assets, liabilities, and equity, revenues and expenses, these are your main types of accounts. That's what they are, your main buckets of accounts. And under each one, we have our categories of accounts. So we have all those sub-accounts where we can classify different things and kind of keep them in order, right? So your assets are the things that you own. So anything you own, like your cash in your bank, so your bank accounts, your inventory are probably our 2 biggest assets that we'll see. Now, there can be other assets. You can have equipment as assets and things, but your bank and your inventory are the common ones we see. Let me squeeze that in a little bit more there. Okay. And then we have liabilities. We're just going to shorten it up there. So then liabilities are the things that you owe. So the things that you owe are things like credit cards and loans. After that, we get to equity. Your equity is everything that's left over, and it's also your net profit or loss from your revenue minus your expenses. So this is just everything that's kind of left over. This is your owner's investments and your owner draw. So this is the money you put in, and the money you take out is your equity. That was in week 3. And then we went on to talk about how we do our, we talked a little bit about revenue and the difference between revenue, payouts, and profit. So you got your revenue is what you earn when you make a sale. This is all the same dollars, but they happen at different times. So your revenue is what happens when you make a sale. Your payout is what happens when you actually pull that money out of whatnot. And then your profit is what you get left over after you pay all your expenses with that money. So 3 events that all stem from the same money, but they happen at different times. And timing is really important. And you're going to see tonight, we're going to talk more about timing. That was the main thing we talked about. Let me do inventory too. We also covered inventory. And inventory and your cost of goods sold. You're going to hear these terms mixed up and used synonymously, but they're actually 2 separate different things. Inventory, as we already said, is an asset. And this is when you trade your cash for something you're about to sell, for your inventory. It's an asset. Once we sell that inventory, it then becomes an expense under cost of goods sold. So while we use these terms interchangeably, they're actually very different terms. All right, so let's close this down. That's our recap of our first few weeks. And let's get into tonight's topic. Put that up there. All right, so let's talk about tonight's topic. Do I have a pen? I always need to hold a pen in my hand to play with. What is... Hi, what's all this? Dana's Fancy Feathers. This is Ledger to Leadership. So we are going over accounting for resellers. I'm a CPA. If you guys don't know me, I'll take a quick second to introduce myself. My name's Tracy. I am a CPA with 30 years of experience. And what we're doing here at Ledger to Leadership, we are in week 7 of teaching resellers accounting that matters to you. So if you're a seller, and you need to obviously know how to do your books, or at least understand what's happening so that you can talk, comprehensively with your CPA or your bookkeeper. So this is what we're doing. We are going through week by week. Every single week we teach one concept. You get a week to absorb it, and then you teach the next concept. Thank you so much. I appreciate that. So then the next week we talk about the next concept. So tonight we are on week 7. We also broadcast our multicast to YouTube. So if you miss any of these, you can always go back and see it. Also, you don't need to buy anything to rewatch this. You can just go to YouTube and rewatch it. So let's talk about cash flow tonight. Cash flow is really about the movement of money. And this is really an important concept to grasp in accounting. We're not going to be talking a lot of numbers. At the end of tonight, we're going to get to some numbers. But you have to understand that most of your accounting is really theory. It's really not a whole lot of numbers. It's understanding how money moves through your business is really what accounting is. So we're talking about the cash flow, the movement of money. And it can get a little confusing when you start to look at it and you're like, oh, if I have money in my bank, then I must be doing really good. Maybe, maybe not. You can have money in your bank and still not be making a profit, because we're talking just about the movement of money, not actually your net profit. They're 2 very different things, and we're going to get into that and discuss that in a minute. You may also look at your bank account and say, man, I have no money left in my bank. I'm doing really bad. That's not true either. You could not have 0 money in your bank and still be profitable on paper. So this is one of those concepts that a lot of people, when they're running their business, particularly when you're new in business, you make your sales, you do your auctions on whatnot, and then you pull your money out. And that's what is your measure of success, is how much money is going into your bank. When that's really not a measure of success at all, or a measure of profitability, it's just showing you where your money's moving to. That's it. Hello, Forgotten Memories. So when we're talking cash flow, we're not talking good or bad. We're just talking about understanding how our money moves. When we talk about profit, profit means, did I earn more than I spent? Okay. It has nothing at all to do with movement. Profit at the end of the day is, did I earn more money than I spent? Cash flow, do I have money when I need it? So you see the 2 different concepts here. Same money, same sales on whatnot, same business, but 2 very different viewpoints of that money. Profit is, did I earn more money than I spent? At the end of the day, is there anything left for me? Cash flow is, do I have the money when I need it? when I need it to source, when I need it to buy supplies, to pay my bills, to pay employees if you have employees. Yes, we all need more profit. That's what we want, right? At the end of the day, we want profit. But you can't always tell that just by looking in your bank. Now, you may say, hey, Tracy, you're wrong. My bank account keeps growing, so I know I'm doing good. Your bank account could be growing. It still doesn't have anything to do with your measurement of profit. We'll get into that a little bit more. And when we talk about live selling, in particular live selling, it creates a lot of gaps. And what do I mean by gaps in live selling? Let's just think about the typical kind of flow of our businesses, just a normal way that things happen. We purchase inventory, right? That's a cash outflow. So that's money going out of our bank. We pay some bills. Maybe we pay our subscriptions, or if you have employees, you pay employees, or, you're buying some boxes to do your shipping. That's more money going out, right? And that may happen 2 or 3 times. Then you have a show. Okay. There's no money movement when you have a show. There's money going into your whatnot account, but there's nothing in your bank account, right? Then you ship. And then a couple days later, that money comes into your bank account. So when you think about a typical show, me as a seller, if I do a show on a Saturday, by Monday, Tuesday, my stuff is shipped out, right? A Saturday show has to be shipped by Tuesday. So that's Sunday, Monday, Tuesday, that's 2 days, 3 days that it's shipped. Then I can say, okay, let me pull my money out. Well, now I'm waiting another 2 days for it to hit my bank. My money doesn't actually hit my bank till a good 4 to 5 days after that show. So just because I had a show doesn't mean I have movement of money. But the money has been moving out because I had to source for that show. I paid money for the inventory. I had to pay the bills, right? So it's that inflow and outflow money that we're looking at. And being able to wrap our head around that as a business owner is vital, so that we don't end up going, wait a minute, I know I'm selling like crazy, but I have no money and I need to go sourcing. What do we do in that? Pull out a credit card, start to get into debt, make rash decisions, start to worry that we're not really making money, when all we really need to do is understand how that money flows in our business. So why is it that you feel sometimes that you're working and you're selling, and like by all other measures, your shows are really successful, but you feel strapped for cash? Anybody here ever feel strapped for cash? It happens to me. I know it has to happen to other people. So we're sourcing before our payouts happen. We're stocking up. Maybe we have a couple of big raid trains coming up and we need to stock up. So we're spending money. We have cash outflows before we have cash inflows. Hello, Blasian Bunny. We have platform delays. We just talked about the delay in getting your money after a show. On average, there is a 4 to 5 day delay between a show time and the time you actually pull money out for that show. And if you're a new seller, it could be up to 2 or 3 weeks. Can you hire me? I am not quite there to be hired yet. The best thing I can do is teach you how to do it for yourself, or teach you at least all the terms and all the concepts so you could talk to your accountant. I do work. I have asked people have asked me if I can do their taxes and such, but I work a 9 to 5 job, and my contract prohibits me from other employment. So refund timing. Let me tell you a story about this. This is a really good example of cash flow. You have a show, you sell something, okay? Let's just say you sold something of very high value. You're one of those sellers that do high value items, so maybe you're only selling 10 things in a show, but they're worth a lot of money. You do your show, 4 to 5 days later, you pull that money out. You're like, okay, I have my cash inflow. Now I can go sourcing. You pay a few bills, you buy some shipping boxes, you source some. You're eating into that money, right? Then maybe a week later, the customer gets their package and they say, hey, I changed my mind, it's broken, whatever the reason is, I want a refund. Well, guess what? Now you have another cash outflow of money you've already spent. Same money, same dollars, very different timing, right? That, without planning, without us thinking through the month, having to do a refund like that, could really impact you. That could be like, wait a minute, I don't even have the money. Now I have a negative balance and whatnot. Now I need to go do another show just to make up my negative balance and whatnot. And now I'm short because I'm not getting more money coming out to me. Hello. Thank you for coming here. So you kind of see how that's flown. We're talking all about just what happens from one show, very different timing throughout. Now, this may sound a little similar to what we did 2 weeks ago when we talked about when we earn the money versus the payout versus the net profit. But we're going to dig in even a little bit deeper. And I'm kind of being a little sneaky here because cash flow is really synonymous for another word that we'll get to. What I want to do is switch over to some examples here. So I'm going to walk you through some real life examples. Thank you so much. I got to show you, since Good Stuff said you like my sweatshirt, I got to show you, look at it, it says Zoe's Treasures, and I got to give credit to the maker. So first, take a look at this. Can you see the back of that? This is TLC Mama Bear. Y'all, you like these? What? Oh, it's TLC Mama Bear's design. So that's who we got it from. She is a seller on Whatnot. So thank you. I love discounts. If you like it, she custom makes these sweatshirts. Highly recommend her. Everybody in my family has one. My husband has one. He has two. I have one, and we got one for our daughter too. So definitely, if you like really good art, this is her original artwork. So she's a great artist. Okay, that was a little side trail, but I got to give her credit. Okay, let's walk through some real life examples of cash flow, and then we're going to do a little bit of an exercise together. So, cash flow in real life. Example 1. This is a seller that's profitable. Oh, there, TLC Mama Bear, thank you so much. I was showing off the hoodie here, your hoodie that you made. So we're telling everybody how wonderful it was. We got a compliment, and I had to give credit where credit was due. Okay, so we are giving an example of a Whatnot seller that is profitable, but tight with money. Things are tight. We all felt that. We're all kind of pinching pennies sometimes, right? So let's think about this. Monthly profit of $2,000. You're like, that's pretty cool. I'll take $2,000 a month from Whatnot. Awesome. Inventory purchased early in the month at $1,500. Platform payout arrives 2 weeks later. So kind of think that through. On paper, it's very profitable. $2,000 minus $1,500, you're still making $500. We have profit on paper. In real life, come the middle of the month, that cash is feeling really tight. Think about this in your personal life. How like your inflows from your paychecks, if you work a W-2 job, and your outflows. When does it feel really tight? Maybe the first of the month when all them bills are due. You got to pay the electric, the mortgage, the rent, whatever it is, maybe the car payment. So maybe things are really tight and you're like, all right, kids, we're not buying them extra, sugary cereals this week. We're going to be chill until next payday before we go crazy at Sam's Club. So it's the same thing in your business. If you have $2,000 of profit throughout the month, that's not usually coming at one time. That may be coming a little bit here, a little bit here, a little bit here throughout the month. But in our example, we said at the very beginning of the month, you had a great sourcing opportunity and you spent $1,500. Well, you hadn't earned all that money yet. So it can make it feel really tight. So that's the first example. The next example is a tax surprise. So we talk a lot about taxes. This one's more towards accounting instead of taxes. I will answer tax questions if you have them. But there's quite a few Whatnot sellers that need to pay estimated taxes, quarterly taxes. So think about this. Good evening, Tober. So think about this. A seller earns consistently, okay? They're doing great. They're just rocking and rolling on Whatnot. They have show after show. They're profitable. They're making money. They're getting this money. But when they get the money, they're immediately reinvesting all of this money back into Whatnot. Sourcing, supplies, all of it's going back into Whatnot. Sound familiar? I've been there. Anybody else, earn your money and reinvest it back in the business? Very, very common scenario you hear, particularly in the first year or so, that everything I earn, I'm reinvesting back in my business. It's not that it's bad, but let's think about what happens. If you're reinvesting it, all of it for the first 4 years, there you go. Thank you. I love discounts. if you're reinvesting all of it and not setting any aside, and then those quarterly taxes come, your profit existed. You wouldn't owe taxes if you weren't profitable. So on paper, you were profitable, but oh no, it's April 15th and I have a tax bill and I have no money. You feel broke. You feel like there's nothing there, but you made money. It's about cash flow. It's about where that money is moving. Is it moving to your sourcing? Is it moving to be set aside? How is that money moving? When is the timing of it coming in versus the timing of it going out? Let's do the third example here. Live selling could be seasonal. I don't necessarily believe in a ton of seasonality, but for some of us, it could be seasonal, right? Maybe you sell women's swimwear. Probably not a big seller in the middle of December, right? Probably really good about this time of year, women's swimwear. So you may have, depending on what you sell, time periods of slower sales. Cash flow planning comes even more important then, because in those periods of high sales, you need to be planning for the periods of low sales. So we're going to talk a little bit about how do we do this? How do we plan for our cash flow? So this is where it comes a time when we're going to actually do a cash flow exercise. So I encourage all of you to have a pen and paper just to give this a go. Think about it a little bit. What we're going to do is you're going to note the expected movements of money in your own business. You don't have to share the numbers with us. Keep everything is confidential. I would never ask you to share any private information, but you're going to note the expected movements of money for next month, for the month of May, for your business. If you have the book or the PDF, you have a blank calendar that you can fill in to document your inflows and your outflows that you expect for the month of November. Or not November, sorry, for the month of May. I'm a little too far ahead in the year. So what are you going to document? What do we want to look for? For cash in, for our inflows, we want to look for when do we expect our platform payouts? And I'm going to go through the sample one with you that I created to give you an idea. So platform payouts, when do we expect those to happen? What about other income? If you sell on other platforms, do you take that money out as you sell? Do you take it out once a month, once a week? How does that work? I'm already looking forward to it. Maybe just a little. Hey, I already miss it. We're what? 5 days past it? Then we're going to talk about cash outflows. What are your cash outflows for the month? Now, yours may look very different from mine or different from the person above or below you in the chat. We all have different cash outflows depending on your business structure. But some of the common ones: when do you purchase inventory? When do you purchase supplies? When do you have to pay for all of those subscriptions? Canva, Vendu, Spotify, whatever other subscriptions, ChatGPT that you may have. Do you set money aside for taxes? When do you do that? Do you do it every show? Do you do it once a month? So when is your timing for setting aside your tax money? And you may have other expenses that I didn't list that are just unique to your business. So we're going to look at the cash in and the cash out. And then we're going to talk about where are the gaps, what expenses happen before the cash arrives, and what needs to be reserved in advance. You're probably sitting there going, man, this sounds pretty familiar, right? What does it sound like to you? I don't like this word, and I don't like to use this word. I use cash flow instead. But this really is kind of reminiscent of the B word, not the one you're thinking, but of budget. Right? The bad B word, budget. Nobody likes budgets, right? Budgets feel restrictive. Hello, Miss Jen Hen. Yes, boo on budgets. Yeah, what's that? Exactly. People like to avoid budgets because budgets have a bad connotation. Budgets feel restrictive and mean and punitive, and I can't use my money the way I want to. I've got to follow this budget. So I don't like to use that word. I use cash flow. What you're doing is you're planning the inflow and outflow of the money in your business, because you're the CEO of your business, you're the master of your business, and you are the one who plans when that money goes out and when that money comes in. So let's take a look at this sample one that I did. And I encourage you guys, if you have the book, to work on this on your own, using your own information. And if you don't, just take a pen and paper and do a fake calendar there and write in the dates. So we're going to try to switch it to the camera on top and zoom in if we can. He's working on it. He's having little issues with this camera. Nope. Okay, I'll just hold it up. Well, maybe. We'll see. He's trying to get our camera so we can give you a good view here. So the first thing I want you to start thinking about, before you could figure out your payouts, what comes before the payout? You got to do the show, right? So you should have an average amount in your head that you earn per show. Who here, without telling me numbers, who here, throw an emoji in the chat if you know that they're like, hey, there's an average amount I earn per show. I can pretty much count on, if I do a show, I can get X number of dollars. Who here feels that they have that knowledge? There's 30 of you in here. Not one of you feels like you kind of can estimate, if I do a show, I can count on X number of dollars. Let's see, we're going to go this way. All right. All right, good. A couple of you. Thank you. Yes. So what we need to do first, and I know this is a little small, but what I did, it depends on the show, correct. However, we should be able to start to plan this. Let's go. If you take it off, are you going to have a hard time coming back to that camera? Okay, let's talk through this really quick because I want to talk through this concept. Because I didn't get a whole lot of yeses in the chat, I want to talk through this concept really quick. This is one of the concepts I mentioned on a couple of times on my Friday morning shows. Handmade is harder. Tober, I got to give it to you. Handmade, a lot of times, while our accounting concepts don't change, the application and how we apply them can be very, very different for handmade. So y'all kind of got to hang in there. I told you after tax season I was going to come up with some stuff just for handmade, and I am working on it. But let's think about, how do we estimate our income per show? First of all, you should be able to look back. If you've done at least 4 to 6 shows, you should be able to look back on your shows and say, if I'm pretty much selling the same stuff in each show, right? Maybe not the exact same items, but I'm selling vintage decor. I can look at 6 vintage decor shows where I normally sell 50 to 80 items in a show. I should be able to then, through my Whatnot analytics or my own records, if you're keeping your records, say, okay, when I do a show, my average order value, so that's the amount of money you get for each item on average, is, let's just say, $10 to keep the math easy. So if my average order value is $10 an item and I sell 50 items, that's $500 in gross profit for that show. After fees and taxes, I'm probably netting, or after fees and shipping, I'm probably netting, let's just say $350. I should be able to project that. Based on your history, you should be able to project the same type of stuff. You can look back over 4 to 6 shows and say, all right, one show I sold 100 items. The next show I sold 50. I sold 60 here. This was a weird show. I only sold 20, but I know why I only sold 20. And get an average. You should figure out, okay, if I kind of repeat what I've been doing, I can expect that I can sell X number of items. And then once you know that you have X number, it depends how much Tony talks. Once you know that you sell X number of items and you know what your average order value is, you have the information to project what you should be able to make in the next show. Okay? And it's not just the next show. We're now talking about planning out our month. So let's go back to this calendar and we're going to walk through, now that I know how I'm figuring out my projections. So let's switch back to our camera, please. And I know my writing's messy, forgive me. I probably should have been a doctor, but I don't like blood, so that wasn't going. So I have penciled in here, show. Every Saturday, I'm going to do 1 show a week, okay? And I know I'm going to make X number of dollars per show, but I'm not even concerned about numbers at this point. Right now, I'm mapping the inflow and outflow of money. That's all I'm doing. So I'm figuring out What's the inflow and outflow? And we'll talk about why in just a second. So I'm going to list my shows. Well, I already know that if I do a show on Saturday, I'm going to ship on Monday. I'll probably get my payouts on Tuesday. So I put show payouts on Tuesdays. Now, I'm a little bit halfway, I'm ahead here. I know now that I can count on having money every Tuesday. The next thing I want to do is look at my outflows. When do things leave my business? Well, on the first of the month, I have all those subscriptions, Canva, Vendu, all those goodies that I use, all those tools, they go in my bank account. So I have an outflow on the first. I got to go every Saturday. I do stuff all week long. I don't have time. So every Saturday, I'm sourcing. I go buy inventory. I have outflows every Saturday. Well, you know what? Usually around the first week of the month, I also stock up on my supplies. So I have enough boxes and stuff to ship a month. So I have another big outflow right here. So once I map this out, I start looking at this and I start thinking, oh, wait, you know what? I also have taxes at the end of every month. I review how I did and I set aside money for my taxes. That's an outflow. Even if you're not paying the tax bill, you're still pulling money out to set it aside. All right, so let's come back to me now. So now you're looking at this. Well, before we even had a payout, we had 3 cash outflows. Before we had cash coming in, we had supplies, inventory, and all of our subscriptions going out the door before we even had money coming in. So you start mapping it out. Again, don't worry about numbers. Think about the month of May and map out all of your expenses without the numbers, all of your inflows, all of your outflows. When you see it on a calendar, you can start to see, wow, I have this week, the third week of the month is always a really heavy month. For some reason, I pay this bill, and this bill. So then what does that tell you? Maybe I need to plan more shows before that if I need cash to pay for it. Or this month in April, I need to reserve cash to get me through the first 2 weeks of May. That's cash flow planning. That is a huge accounting concept, is understanding that timing and being able to plan your timing, plan your inflows and your outflows so that your business can survive day to day to day. Ultimately, this is a budget. But again, I just don't use that word. I don't like that word because it feels too restrictive. A cash flow puts you in charge of what's happening with your money. When is it coming in? How are you in charge of when it's coming in? You're in charge of when you do shows. You're in charge of how long you're on. You're in charge of what you sell. You can control that inflow of cash. And then the outflow. You have some degree of control over your outflow. I could maybe try to reduce the amount of supplies I buy, but outflows are most of the time kind of set in stone. When we talked about expenses in previous weeks, we've talked about our fixed expenses and our variable expenses. I want to say this may have been last week, week 6. When we talked about our fixed expenses, those are those things that are going to happen no matter what. And you better plan for them. If you have a storage unit, that storage unit bill is due on the same day each month. Doesn't matter if you had a show or not. It's not like you can call the storage unit and say, hey, sorry, can't pay you because nobody was buying from me in my last 2 shows. They don't care, right? You have to plan your cash to be in order to pay that storage unit. Maybe you pay your cell phone out of your business, so you know what day your phone bills due. So when we're looking at fixed expenses, those are the ones that don't change. Those are the ones that are like they are there every single month, regardless. Then you have your variable expenses. Those are the ones that are going to fluctuate in accordance with your sales. You make more money, you make more sales, you need more boxes, right? You make more sales, you're paying more whatnot fees because you have a fee for every sale you're making. So those are variables. We need and that's why we talked about last week when we talked about expenses, to understand those different types of expenses. And now we're leading into this cash flow where it's like, okay, now I'm going to map out those expenses so that I can figure out when I need to do my shows to make sure that I have the money to pay for those expenses and ultimately have net profit, money left at the end of the month. So your job is, if you have the book or the PDF, go ahead and use what's there. On this page, we tell you kind of what to map out. So it kind of lays it out for you. And then we go into 3 questions that you really want to start considering when you're mapping this out. And I'm going to go back over those. Where are there gaps? Where is there time that I have more money going out before I have money coming in? I need to focus on that. I need to do something about that as a business owner. Which expenses happen before that cash arrives? And what needs to be reserved in advance? Do my taxes need to be reserved if I'm paying them every 3 months? If I'm paying them quarterly, I need to do something before that quarter hits and that tax bill comes due, right? So this is your first step in creating your cash flow plan. No numbers, just mapping the movement of the money. A little bonus here, you get this down good, you can do the same thing for your personal life. I've been asked before to do classes on personal finance, same concept. So if you can understand this for your business that probably has far less ins and outs where you can really, it's a lot easier to do, master this and go do it in your personal life. You're unstoppable at that point, right? Because when you can start to gain that control over that inflow and that outflow of money, guess what happens? Your money becomes so much more powerful because now that realization that you have control over that inflow, when it comes in, how much comes in, then you have control over the outflow. And when those things happen, now you have the ability to start investing in other things, buying better equipment for your business, spending more money on higher types of inventory. These are the first steps in really gaining the mastery over your money coming in and out of your business. Okay. So if you have the book, you have the tools in front of you. If you don't have it, all you need is a blank calendar page. You can go to Canva, probably PowerPoint. There's probably a ton of software out there where you can get a blank calendar page, or just take a piece of paper and write 1 through 31 on there for the days of the month. And you can do the same exercise with just a pen and paper. The next step to do, we're kind of going, this one's a little bit shorter. The next step, if you have the book, we have a cash flow planning worksheet. This is really great that you can copy this and you can use this month after month after month to plan your cash. So we're going to walk through it. Can you bring the worksheet up on the screen, please? So we're going to walk through what this worksheet looks like. It'll take just a second. He'll get it up there. Okay. So how to use this worksheet, and maybe zoom in just a little bit on the top there. This worksheet helps you plan when money moves, not just how much you earn, but profit tells you if your business works. Cash flow tells you if it's breathing. So your first thing you're going to do is figure out your cash available at the start of the period. So May 1st, how much money do you have? What do you start in that month with, right? And then the next section, you're going to go through and you're going to put all the expected cash that's coming in for the month of May. There's some ideas here, but you can also write in others. When are you going to get those platform payouts? And I purposely labeled this platform payouts because you need, if you're looking at all of your cash and you also sell on Poshmark or eBay, you want to know when that money's coming in also. I don't know about you guys, but when I was doing a lot on the other platforms, I would just set it up so once a month it would just automatically at the first of the month come in, because then I would have everything for the prior month deposited on the first of the month. That would give me some cash inflow to help kick my month off when I really needed it. So when do you get those payouts? Do you get tips or bonuses? That could be something. The bonuses such as if you're a brand new seller, first time selling bonus, whatever else. And other income. Maybe you're doing Facebook Marketplace and getting some cash money coming in and it's not a platform payout. So you're going to put in the date expected and the amount of all of those and you're going to add it up to get your total expected cash in. Now we're taking that flow that you just did and we're putting numbers to it. So this is the second part. You're just looking at movement and now you're actually assigning some real numbers behind it to make sure that you didn't miss any gaps and that you're going to be okay. So then you go to your expected cash outflows. This is for the next 30 days. You're going to map out when do you normally buy inventory. And I know some of you are like, hey, I don't know, whenever the auction shows up, I can't tell you what's going to be an auction whenever I have the opportunity. Okay, I'll give that to you. But I also think that if you look back, you probably visit the same auctions You probably have certain days that with your schedule work for you to go sourcing at wherever it is that you source at. You probably have set days. I know my auctions that I go to frequently close on Mondays and Thursdays. So I pretty much know when my auction outflows are going to be when I'm buying my inventory purchases. So inventory, when do you buy shipping supplies? Do you go weekly to run it to Walmart, or do you buy in bulk from like Uline or the Boxery? I buy in bulk once a quarter. So I know every quarter I'm going to spend a good fair amount on boxes. I better plan for that purchase. We're looking at, $1,000, $1,500 a quarter in boxes. I need to make sure I have that money once a quarter to pay for that. Software and tools. When are all those subscriptions coming out? And then are you setting aside tax money? When are you doing that? Do you do it every show? Do you do it at the end of the month? And then we just left for any other expenses. And I may not have captured here the big ones, the popular ones. So then you're going to add that all up and you're going to get your expected cash outflow. We go to the next page. Can you switch to our next page, please? And here we're going to summarize it. So I think we're going to leave it like that. You can zoom in on your phones if you need to, or on your screens. So we're going to now take our starting cash. We're going to pull all those totals from that first page, and we're going to plug it into this summary sheet. We're going to see what our starting cash is for the month. We're going to see how much we have coming in, how much we have going out, and then our projected ending cash. So we add in the cash coming in, we minus the cash going out, and we see how much we have at the end of the month. Guess what that just did for you? All right, we can close this. Let's come back to me. Guess what that just did for you? When you know your projected ending cash, what did you just do? Figured out all your revenue? Took out all your expenses? You know what that sounds like? A pretty rough estimate of your net profit. So now in 45 minutes, we have all gone over how do you identify what's coming in and out of your business cash-wise? How do you wrap your head around that movement of money, right? You now know how to take a calendar and map it out. Don't worry about the numbers. Just map it out. See it visually. This is a skill that a lot of people aren't taught. Now, some of you may be sitting there like, Tracy, this is a budget. I know how to do this. I do this all the time. But and if you do, you are far ahead of so many other people. I cannot tell you how many people I have met, adults that I have met through my years of being a CPA, that have no idea how to plan their cash for the next month in their own personal lives, let alone their business. This isn't a skill that most people grow up knowing. It's not a skill that most people are taught. So if you are sitting there going, wow, I've never looked at it like this, or this is hard, I struggle with this, I always seem to run out of money before I have to pay, I pay all the bills and I run out of money before I get more coming in. It comes back to this. It comes back to understanding your cash inflows and outflows. And don't be embarrassed if you're one of those people, because again, they don't teach it to kids. There are so many people as adults who totally don't understand this. I'm going to give you a good example. I'm a CPA. My children have grown up in the household of a CPA. I've always lived by cash flow planning in my personal life and for any business. I've been freely speak about money with my children. My 22-year-old son, who's living on his own for the first time, I was just over at his place this weekend, walking through his budget or his cash flow with him. He's like, Mom, I just need help. He's like, you've talked to me this, you've talked about this my whole life, but this is his first grown-up experience of paying all his own bills, making all his own money. He's like, I need help. I need you to help sit down and write this out with me. So this is a 22-year-old man who grew up with a CPA mom, who grew up hearing this, still needed someone to sit down and help him. So I know what I'm talking about may seem somewhat rudimentary to some of you. To a lot of people, this type of planning just doesn't come naturally. So I'm going to recap the steps again, open it up for questions, and if not, we may end a bit early. Again, I only go for an hour. And maybe we'll talk a little bit about our CEO questions we have at the end of each chapter too. So understanding your movement of money. We talked about cash flow and net profit, two different things. The money in your bank has nothing at all to do if you are profitable or not profitable. It is just how that money moves through your business. That's all it is. So we talked about the example of you do a show on a Saturday, you're shipping, you have to get that show out by Tuesday per Whatnot guidelines. So say Tuesday morning you finished up all your shipping, and now you can say, hey, Whatnot, I want that money, send it to my bank. Well, that could take up to 2 days, sometimes longer. Let's just say 2 days. Now that's Thursday. So we have had a show on Saturday, don't get our money till Thursday. But wait a minute, I need to pay some bills in the meantime, right? So we talked about same money, different timing as it moves through the various stages in your business, okay? So understanding that and then mapping that out, taking a calendar, don't think about numbers, just think about when does my money come in, when does my money go out? Look at everything you're spending for business only, that in and that out, understanding that flow in your business. Then you start to assign numbers to it and you start to say, wait a minute, this week here or these dates, I'm spending a ton of money and I don't have any coming in. Now we can start to harness that and say, okay, here's my genius idea of I need money. Guess what? I'm going to do a couple of shows, get some cash flow. I'm going to give you a perfect example of how I apply this as a CPA in my Whatnot business. I do a big show every Saturday. That's my selling show. That's my big vintage decor show is every Saturday. During the week, on Monday mornings and Wednesday mornings and Friday mornings, I do kind of like a chat show. Monday and Wednesday is a chat and sell. I sell very small, easy to ship items, and I only usually list 10 items in my auction tab, and I have 15 to 20 in the bin. Okay? But they're not big money makers. And again, 10. All I do is 10 auction items, and if somebody pre-bids, I will run it. But I don't try to sell it. They're there. They're part of the show. Normally, people will pre-bid on a few of them, okay? So my Monday and Wednesday shows are not money-making profit shows. But what they do provide me is cash flow coming in on Mondays and Wednesdays, okay? So I sell it on Monday, ship it out. I get a little cash flow by Thursday, Friday, Wednesday, same thing. So it's a consistent turnaround of money flowing through my business. They're not the most profitable shows, but it keeps money coming in on a regular basis that I can count on to keep my bank account flowing, right? To keep my business moving. Saturdays then are the more profitable shows. That's my money makers, right? That's my profit show. That's where on paper I'm really showing a good profit and I get a big hit once a week in the bank account. Okay. Well, having little smaller amounts flowing through the bank account throughout the week is that sustaining until that big hit comes once a week. And I don't say this in a braggy way. I'm trying to paint the picture of how you can control and design your business to have consistent cash flow in your business. You've just got to really think it through. How can you do that? One of the ways in some of the chat shows, you'll see a lot of people selling PDFs, books. I do it. All of my stuff is really focused around accounting and tax business type topics because that's cash flow that sustains us in between the big selling shows and monetizes what we're doing. So hopefully all of that makes sense and gives you some ideas to think about when you're like, you know what, I'm tired of money being a little bit tight. I want to be in control of this. Being in control of the inflows and the outflows is the first step in really having some financial freedom in your business, having options and choices. When you are constantly doing that paycheck to paycheck thing, but in a business, it's show to show thing, like I got to do a show to get some money. I got to do another show to get some money versus planning it out, having consistent income, understanding where those expenses are. If you're just doing that show to show thing, you're not building wealth. You're not building your bank account. You are missing opportunities in the sense of if somebody called you up and said, hey, guess what? My cousin Joe just told me about this great, estate from his, great second removed uncle, whatever, passed away and they have 1 million, pieces of vintage decor. Do you want to go and buy it? Well, if you're going show to show to show, you're not building that wealth. You're not building the bank account. You can't take advantage of these opportunities when they come to you, right? If you are going to an online auction and it's like, oh my God, this is everything I've ever wanted in an online auction. There's 300 lots here that I want to bid on all of them. If you don't understand your cash flow and when that money's coming in, if you haven't harnessed that power, you're like, oh, there's 300 auction lots. That's probably going to cost $1,000. I have $100 to spend on sourcing. Guess I'm not buying that stuff. You can change that in your business. It absolutely 100% is in your control. So I've kind of rambled on a bit. That is all we have for tonight is cash flow. Let's talk about the CEO questions. I don't normally go into this, but we have a little extra time. So the last page of every chapter, we have some CEO questions that relate to that chapter. And then there's a notes page. But these CEO questions are meant for you to reflect and to think, how does this apply in your business? And the first one says, do I currently plan for cash timing or do I react to it? Do you plan your inflows and your outflows? Or are you just like, okay, I'm going to go grab a few boxes and do a show and see how much money I can make and then see how much I can source again. Are you reactive? Or are you proactive? Okay. Where does my biggest cash gap occur each month? As a business owner, you should be able to identify where's that gap. Now you can fix it. If you can't identify the cash gaps, you're always going to have more months than you have money. We don't want that. We want more money than we have month. We want it the other way, right? Am I setting aside money for taxes before spending the rest? Are you the type of person who does a show and 100% reinvest? Or are you also planning for these other things that are happening in your business? Because what happens? Let's just say that you never plan. Let's do this as a personal example, and then we can relate it to business. If you don't plan in your personal life, you get your paychecks, say you work for somebody else, you get your paychecks, you spend every dime. The 14th of the month comes, you're like, thank God I need my paycheck tomorrow. On the 15th, you get that paycheck, you spend every dime. And lo and behold, the brakes go out on your car. $800. Well, I didn't plan for that. I didn't put money aside. Okay. This is no different. The concepts don't change. Money concepts are money concepts. They apply in so many different things. Same thing happens in your business. You get your money, you spend it all, reinvest it back into business. You get some more money, you reinvest it, do another show, reinvest it. What happens? God forbid you get sick and you can't work for a week. You can't do shows for 2 weeks. You can't source, you can't do shows. What are you going to do? Do you have a cushion? Do you have money set aside to cover that for continuality in your business? This is cash flow planning. If you know what's coming in and you're setting those funds aside and you can look at your calendar and say, okay, I'm going to take the inflows out. I don't feel good. I know for these 2 weeks I'm sick. I can't have no inflows. Do I have enough money to cover my outflows? If not, do I need to move my outflows to a different timing, different period? If you don't already understand it, you can't then plan for it. You can't adjust as needed when something happens. How would cash flow awareness change your sourcing decisions? We talked about that. We talked about being able to take advantage of sourcing opportunities. So if you had cash flow awareness, how can that change how you're sourcing? What would feel different if I planned 1 month ahead instead of just 1 week? How would that change your mindset? How would that change your planning on your shows? Your planning for your business? If you stopped right now on the 20th of April and planned through the end of May. This is for some people, it's a completely different way to look at it. And how do I know it's a different way to look at it? Because there's a huge culture on Whatnot of, oh, just do some shows and then move them if you can't make it. It's okay, just reschedule your shows. Because that's not planning. You don't have to be like me. I plan months in advance. You don't have to be months in advance planner like me. I'm a little over the top with it, and I get that about myself. I understand that. But if you just planned next month and you planned your shows and you committed to those shows because that was your cash inflow to cover those cash outflows, how could that change your business? Okay, so those are our CEO check-in questions that we have at the end. Every chapter in the book or PDF has those CEO check-in questions to get you thinking, to be like, wow, maybe this is powerful. Maybe it's not something that applies. But all right, that is week 7, cash flow planning. And if you've been here or just joining, as you could tell, we didn't do a lot of numbers tonight. Again, accounting, a huge chunk of accounting is understanding the theory, understanding how that money moves and how it goes in and out of your business. That is a big part of accounting. And then we get to, okay, now I need to record a little bit of it. So next week, we are getting into the first of the financial statements. I told you at the very beginning of this that we are going to start with that basic accounting equation, assets equal liabilities plus equity. We're going to learn debits and credits, and we're going to go all the way through to where you can create a profit and loss and a balance sheet for your business. And then once you create that, we're going to work on ratios. We're going to look at, okay, I've got this information. How do I use this to make powerful decisions in my business? And we're getting there. We're getting there really fast. So next week, week 8, is the profit and loss statement. This is understanding your performance as a business. So this is what we're going to do next week. I hope you'll join me for that. And we're going to go find somebody to raid. If you guys have any questions, I didn't see any in the chat, but if you have any, you can put them in there before I raid, or feel free to DM me at any time. I am always happy to try to answer questions. And so don't be shy. If you have a question, just send me a DM. And we will be back here next Monday night to do the profit and loss. However, tomorrow night, I'm going to do a quick plug. Tomorrow night, we have the CEO Challenge. If you have not heard of the CEO Challenge, y'all need to come to my shows more often. The CEO Challenge is a combination raid train challenge reality TV event that I am putting on for the month of April. We have 6 participants. They started 3 weeks ago. You want to play it really quick? Tell you what, let's play you the intro. Yes, all of my shows are on YouTube. I'm going to show you what the CEO Challenge is and then tell you about it real quick before we raid.
6 sellers.
There's our participants.
Learning. Building. Through weekly challenges. Building the business, not just the show. Welcome to the CEO Challenge.
So those are 6 people who have committed to having a different challenge each week. And these challenges, some are financial, some are business related as far as structural, systematic. This week, their challenge was to identify a system that needs fixing or improving in their business, to work on that challenge. And then they also have to work on their opening for their show and do smooth transitions between opening and selling and closing. Tomorrow night is the raid train portion where they're going to speak to you. They're opening their business so you can see what they're going through and follow along in the challenge. They're going to talk to you, and they're also selling. And we have a whole variety of sellers, so you're going to see a bunch of different things. I encourage you to check out. I have a bookmark. It starts with me. I open the show tomorrow, and then we raid into them. It takes about 2 hours. Each person's on about 20 minutes. But it's really cool to watch these sellers growing their businesses and focused in on goals. They have metrics that we've zeroed in on that they're tracking. And this is a 3rd show. 2 weeks from tomorrow night, we're going to have the 4th and final show where they're really going to tell you, kind of sum up the whole experience. So it's a really cool thing that we're doing and completely different than what's been on Whatnot. So if you haven't watched it, please check out our CEO Challenge tomorrow. And with that, we're going to go find somebody to raid. Let me see who is on. Thank you all for being here. I totally appreciate it. And again, if you have questions, I'm always happy to try to help answer them. You know what? We're going to go see Mel and Stella Cards. Mel and Stella is one of our CEO participants, so I have to go and see her. And y'all, if you have never seen playing cards, hang out for just a minute, check her out. Not only is she entertaining, she is super educational, and I have learned so much about playing cards from her. Put ducks in the chat when we get there.